In this segment of Kitco Education, David Erfle of JuniorMinerJunkie.com joins us to teach us how to pick a mining stock. His pick of the day is Probe Metals, PRB.V on the TSX. David, welcome to this segment, and thank you for joining us today.
Thanks for having me, David. Always a pleasure.
Let's start with a brief overview of this company before we get into the nuts and bolts of why you picked it. So what can you tell us about Probe Metals? It's been on your radar for a while, I imagine.
Yes, it has. Back during the brutal bear market of 2013 to 2015, Probe Mines was purchased by Goldcorp, and for I think about $450 million, which was quite the success story when you could sell a company like that during a bear market. And David Palmer, who was the CEO of that company, now is the CEO of Probe Metals, which holds the spin-outs of properties from that sale. And basically, it's in the Val-d'Or district, which is one of my favorite jurisdictions. And the company has proved up about 3.5 million ounces of their Val-d'Or East project. And they're about to release a resource estimate update, I think in Q1 or Q2 of next year. So this is a very interesting company.
Okay. So today we're going to walk through the entire process, or a summary of the entire process of how you pick a stock. So how did you, first of all, come across this company? And starting from just looking at the tickers, looking at the latest stock price, what is the next thing you look at in your decision-making process? We'll go from there.
Sure. Yeah. Well, during that fun bear market, had a lot of time to go over a lot of companies, and some of the companies that have survived and have prospered since then are very interesting, and this is one of them. Like I said, they are in the Val-d'Or area, which is one of my favorite jurisdictions because there's so much infrastructure there already. There's already skilled workforce. These companies, they don't need to build camps. It's very cheap to drill.
Val-d'Or is in Quebec for those of us who might not be familiar, right?
Yes, in Quebec. Yes. They're hard dollars that they put into the ground there. They get 28% of them back in a check from Revenue Quebec. So it's got a lot of pluses to work there. And Probe controls 435 kilometers of a consolidated district there, and it's only been 5% explored. So there's plenty of potential there. And also, the company has another jurisdiction that has heated up lately, and that's the Detour Lake area. They've got a huge land package there that they're going to start exploring. And we had Kirkland Lake buy out the Detour Lake company, the Detour Gold, and then we had Wallbridge take over Balmoral and consolidate that area. So it's kind of a hot area play as well there. So they've got two interesting jurisdictions there and that they control and that they're working on.
So when a ticker comes to your attention, what do you look at first? Is it management? Is it jurisdiction? Is it the deposit? Is it their operations? What is the first thing you look at? Then what is the second and the other things you look at?
Well, David, the very first thing is the people. Who's controlling it. And this is a very experienced management team. They've basically done it before. They've taken a project from discovery to a resource and sold it to a major. And they're in the process, I think, of doing it again. You look at their track record, you look at their access to capital, you look at how much of their own capital they have in the company. I mean, I even asked them how much they paid for their shares. That's always very important to me. And also the access to capital is the big one. Probe also, they've got over $30 million right now. And they've had that for quite a while. So, we've gone through this huge financing wave, and Probe did not have to participate in that because they already had the cash. So the downside of this financing wave that started in April is 4 months later, these shares become free trading. So that's what's happening right now. And a lot of these companies are selling off because of that. while Probe is in the process of breaking out of a huge 4-year base because of this. Because they don't have any shares coming free trading from a finance, and also they're in a top tier jurisdiction, and they're proving up a lot of gold in a very good jurisdiction.
Okay, so let's talk about management first, and then we'll move on to the other things. So let's break it down. When you're looking at a management team, how are you evaluating them? You mentioned track record is an important factor. What about their personal backgrounds? Does it matter if they come from a geology background or a finance background, or maybe even a politics background? Like, how does their background affect the decisions they make, and the priorities that they have?
Well, I think the access to capital is a big one, and their track record of under promising and over delivering. I mean, that's what you really want to see. As far as that you want to have them to have good relations with in the First Nations in the area, if that's what it is, or the governments that they have to deal with, and these other jurisdictions that have been come under scrutiny because of their governments. You can get a successful junior in working in a country that is not known to be very mining friendly if they have good relationships with the governments.
Okay, so when you meet with management teams, what kind of questions do you ask them?
Well, like I said, the first one is how much did you pay for your shares, and how many shares do you own, and how much have you raised capital before previously for a company? Have you taken a company from discovery to even pre-feasibility or even production? There's management that have track records like that. I mean, that's what you want to see. You want to see have they had past success in what they're trying to do now and previously.
Any other notes about management before we move on?
No, I just and that's the bad thing that what's going on with this pandemic is you can no longer go to these conferences and meet with these people in person, because I like to meet with them in person. You can't do that anymore.
Well, you also can't do site visits now too, right? Are
Exactly.
those important to you?
Right. That's another thing. Yes, that's another thing. So which is a big reason why we're not seeing a lot of M&A right now. These companies can't do boots on the ground due diligence.
Okay. All right, let's talk about site visits now. So when you're on a site, what are some of the things you look for?
Well, a big one I look for is organization in the office. I've been on site visits where you get there and you have no idea what these people are doing. They're over here, they're doing this, they're over here, they're doing that. You go in the office and there's papers strewn everywhere. It's totally unorganized. And then I've been on the site visits where it's exactly the opposite. I like to see people that are meticulous, that pay attention to detail, and any question that I can ask about maybe a drill hole or an area, or are you going to follow this up? They're going to have answers for me right away. They're not going to say, well, I have to talk to somebody else about that and get back to you. So basically, I'm very detail oriented, so I like to see that.
Okay, let's talk about jurisdiction. So we've talked about management and site visits. How do you evaluate a jurisdiction then? What makes you like, let's say, Quebec more than someplace else?
Well, the least amount of government interference. Is it mining friendly? Is there brownfields areas in the area? That's what I love about Val-d'Or. There's brownfields areas all over the place. You had during the bear market, these majors, they had to do all they could to try to produce an ounce of gold at a profit. So they didn't go out and acquire projects during the bear market like they should have. They did it at the top of the bull market instead and overpaid. So what these smart management teams of these juniors did was they did what these majors should have been doing. They went into these areas and they staked all this ground, and they collected all these projects. So that's what Probe did, and that's what a lot of these other juniors did in that area. So that's what you like to see. You like to see people taking advantage of a situation.
What do you think, or where do you think has the highest risk, the jurisdictional risk in the world right now?
Oh, wow. Places like, I think China's high risk. I think, Russia's high risk. Venezuela's high risk. I think Brazil is high risk. A lot of people don't, but I think Brazil is high risk. I have a very narrow list of jurisdictions that I like to stay in. I don't like to take too much jurisdictional risk. I know others do, but I was fortunate to accumulate most of my positions during the bear market. So top tier jurisdictions were on sale, and they're not anymore. What's on sale now is tier 2 and tier 3 jurisdictions.
Can you clarify what that means, tier 2 and tier 3? And I imagine that the risks in China are different than the risks in Brazil, right?
Oh, absolutely. It's completely different. I feel that the risk in Brazil is a lot of these projects are in the Amazon. You got a lot of water issue. Water could be your best friend or your worst enemy in the mining business. And in Brazil, it's their worst enemy. I know the government's it's getting better to do permits there. That has gotten better, but it's just a jurisdiction I stay away from. Ecuador is another one. I know it's up and coming, and a lot of people like it, but that's just a jurisdiction I don't like to go into.
Okay, and I assume for China and maybe Russia, it's the risk of nationalization. Would that be a concern?
Absolutely. Right. Yeah. I mean, look what's going on over there in Papua New Guinea with Barrick and that mine. You just have to worry about these countries coming in and saying, wow, look at the gold price. It's $2,000 an ounce now, and look at all this money we're leaving on the table by letting these companies come in from other countries and take all our natural resources. You really have to worry about that.
Well, in theory, what's stopping, let's say, the United States government from doing the same?
That's a great point. But I don't see that anytime soon happening anytime soon. There's always, let's put it this way, David, there is always jurisdictional risk everywhere, isn't there? But I mean, there's just less risk in the United States.
So then what really is the point of investing in a place with a high jurisdictional risk? Is it because there's a premium attached to it, and maybe you'll make a little more money when you flip it? Is it more volatile? Well, what's the rationale here?
Well, the rationale is these ounces in the ground are going for a lot less because of the jurisdictional risk. I mean, I could give you a good example in a company like Orezone Gold. They have a tier 1 asset in Burkina Faso, and it's right near the capital. And their project is right next to an army training base. So there's really there's not much security risk, which has been attached to that jurisdiction, and yet the ounces in the ground are on sale right now. This is a project that is at the finance stage and makes a lot of money at $1,800 gold, yet it's very cheap. So you look at things like this, and this is why they're cheap. The investors are taking into account the jurisdictional risk.
Okay, let's bring it back to Probe Metals now. What can you tell us about the deposit that they have and the quality of the ores?
I mean, it's a high grade deposit, and it's in a great jurisdiction. I'm not a geologist. I'm not the type of person to ask as far as geology questions. I'm just a back of the envelope person as far as geology is concerned. But this is a very good deposit in a very good jurisdiction, and it has blue sky potential. That's basically the things that I look at, and that's a big point right there, is blue sky potential. These majors aren't going to come in and buy a project that only has 2 million ounces and they don't see any upside. They want to see upside, and they want to see high margin. These majors, they already have these large deposits on their books that are low grade bulk tonnage, and some of them are basically coming into being economic now. So they're not gonna go out and take over a project that's marginal. They did that at the top of the last bull market, and it burned them, and they learned a lot of lessons. And all these same people are still around. So that is not going to happen again. So you want to focus on these companies that have that have top tier assets in good jurisdictions and with blue sky potential.
What do you mean by blue sky potential?
Basically, let's say the company's already proved up 2 or 3 million ounces. It's a large land package, and they're stepping out in other areas. I mean, basically, what you want to see is you want to see these companies proving up proof of concept, but not over drilling at the same time. So you want to see them prove up, basically showing these majors that here, this is a proof of concept with this. We're stepping out here. You see how this project can get bigger and bigger and bigger, and look at our land package and look at our infrastructure. You know, that's key also. There's got to be infrastructure. Also, you know, take a look at this, and is there skilled workforce in the area, and is there potential for this to get a lot bigger?
I think a lot of people are like you. They don't have a geology background and they're self-taught investors. So when you go to these conferences and literally every single miner in their booth says they've got the best deposit in the world, how do you then make a judgment call?
Well, I'm fortunate, David. I have people that I know that are geologists that I run projects by them, you know, I'll basically say, you know, I went over to this company's booth. You know, I liked the management. You know, I like the jurisdiction, but I'm iffy on the project, and they'll tell me what their opinions are. So I'm very fortunate to have a knowledge base like that, where I know some geologists that I can trust when they give me their opinions.
Well, let's look at the balance sheet now. I just have it open in front of me. So one thing that struck out to me is they have a huge cash balance. So $28.9 million as of June this year versus a relatively small position in current liability, so only $1.3 million. So we're not concerned about liquidity issues at all here. That's just the first thing that struck out to me. What are some key components that you evaluate when you open up their financials?
I mean, that's a big one right there. You don't want to see any debt. You want to see low G&A. You don't want to see them paying themselves too much money, you know, because there's a lot of lifestyle companies out there, and again, that goes to track record. But basically, you know, the big one is, especially now, is are they funded through 2021? Because, you know, we've just had this huge wave of financing where every miner and his brother were basically cashed up. So you want to make sure that this company is cashed up through 2021. There's nothing wrong with taking maybe a little flow through or something at the end of the year, or maybe doing another raise if the stock price does really well on a discovery or a big move in the market. If they can raise more money at less dilution for the future, that's always a good thing. But as long as they do it smartly, that's what you want to keep an eye on.
I've spoken to some investors who work in the tech space, and they've worked with tech startups, and it's a very different culture there. If you see a large cash balance in a tech startup, it means they're not putting the money to work, right? They're not investing in new equipment or new talent. They're just being unproductive, and so you actually don't want to see in an early startup phase for a tech company, at least, you don't want to see actually positive profits or net profits, because it shows you that they're not deploying every single cent of their capital. But it's you wouldn't want that to happen for a mining company now, would you?
I would love to see, I always like to see a company have plenty of cash. You know, I mean, if they're cashed up through 2022, that's even better. But like I said, as long as they're using it wisely, they're not paying themselves too much, and they're not over drilling because they have the money. That's a big one. You know, there's an old saying in the mining business, you know, as far as exploration and drilling is concerned, you want to leave a little negligee. And that's basically what you want to do. You don't want to, you know, raise a bunch of money and then just drill for the sake of drilling. You want to do it smartly. You know, you want to prove up proof of concept without over diluting.
Finally, let's talk about valuations now. How do you value a mining company like Probe?
Well, you take what is the market valuing their ounces in the ground? Are they undervalued or overvalued to their peers? And Probe is undervalued to their peers. And you basically take a look at what you compare it to. You use the same jurisdictional risk. You compare companies in the same type of jurisdictional risk, and how much they're trading at ounces in the ground. That's a good way to do it.
So you don't assume cash flow or from development or production. You value just how much they have in reserves.
Right. How much? Yeah. I mean, it depends on where they're at, what stage they're at in their project. You know, if they're still if they've just issued a PEA, and they're still growing the project, they haven't got to feasibility yet. And yeah, you know, once they start to get towards a finance stage, that's a different criteria for valuation.
Okay, so we've talked about management, jurisdiction, and then the deposits, financials, and now valuations. Is there anything else we're missing in the process?
You know, I mean, as far as jurisdiction is concerned, the reason why, you know, I followed probe for a long time before I got into it. You know, I didn't get into it in the 2016 run up. And then I just kept following it. And the opportunity came during the sell-off in March. So the biggest reason why I invested in Probe was the area play in Detour Lake. You know, that area is really heating up. So I think that the stock could really run based on the area that area that's heating up there. And also the fact that, like I said, the company already had plenty of cash. They didn't need to cash up.
All right, David, that was very thorough and educational. Thank you so much for your time. Where can people learn more about your work?
My website is juniorminerjunkie.com, and that's junkie with a Y. And also on Kitco, every week I have a weekly column that comes out on Fridays.
That's right. Now, I'm looking forward to doing another company with you. That's fun. That was fun.
You too, David. Thanks.
And thank you for watching Kitco Education. We'll have much more coverage and content for you in this program. Stay tuned.